Today we're diving into a topic that can make your wallet very happy. Legal tax secrets of the wealthy. Let's face it, the rich seem to pay way less in taxes than the rest of us. But what if I told you there are strategies they use that you can leverage too? In this video, we're going to crack the code on how the wealthy minimize their tax burden. We'll explore deductions, investments, tax credits, and much, much more. I promise it won't be boring, so buckle up. Get ready to learn the 5 secrets of the top 1% that you can apply to your life as well. Now, it's no secret that the rich pay a much smaller percentage of their income in taxes than the average person. But why? It's not some sort of conspiracy theory.
Conspiracy.
They're simply playing the tax game strategically. The key is understanding how to maximize deductions and credits and where to invest your money to minimize your tax bill. Let's talk deductions first. These are expenses you can subtract from your income, effectively lowering the amount you get taxed on. The wealthy are masters at finding deductions. For instance, some business owners claim deductions for things like travel, office space, and even fancy new company cars. Now, I'm not suggesting that you buy a private jet just for the tax break. Although, wouldn't that be sweet? Just ask Grant Cardone.
Call you back. He calls him back. He's like, dang, dude, nobody's ever done that. The entire amount. I'll find you a jet. They found me a jet. I took delivery of it on December, 26 or something. Okay.
Wrote off a jet?
The entire thing.
The business.
It took care of all my taxes that year and the next year.
Let's just run this hypothetical, not real numbers here. Let's say Grant Cardone had a $10 million income at 37% tax rate. They're going to pay a ton of taxes, but then they decide to buy a jet priced at $10 million. The cost of the jet can now be deducted from his income. In the eyes of the IRS, he didn't make $10 million, he made $0. He doesn't pay any money in taxes this year. Pretty sweet gig, huh? Obviously, this example is a little bit of a stretch for you and me, but there are plenty of legitimate deductions you might be missing out on. Think about home office expenses if you work remotely, or charitable donations you've made throughout the year, even your mortgage interest. Every deduction counts. Now let's talk about investing. The wealthy don't just work for their money, they make their money work for them. They invest heavily in assets like stocks and real estate. Here's the beauty. The profits from these investments are often taxed at a lower rate than income from your day job. It's called capital gains tax, about 15%, and it's what the rich do. Speaking of rich, let's talk about Warren Buffett. I'm sure you've heard of him, but if you haven't, he's the boring, really old guy who owns a ton of stock in businesses and just makes money off these investments without having to work. I'm talking about this guy.
We basically looked for companies where we thought we could understand what the future would look like 5 or 10 or 15 years hence. And that didn't mean we had to do it to 4 decimal places or anything of the sort, but we had to have a feel for it.
So while your paycheck might get taxed heavily, your investment gains get a tax break. It's a smart way to grow your wealth while keeping more of it in your pocket. Now let's talk about tax credits. Tax credits are deductions on steroids. They're not subtracting from your income. They're directly reducing your tax bill dollar for dollar. There are credits available for all sorts of things, from buying an electric vehicle to contributing to your retirement savings. High income earners may qualify for tax credits such as those for research and development or renewable energy investments, which can significantly reduce someone's tax burden. Let's say you purchase a Tesla from multi-billionaire Elon Musk. Believe it or not, he's actually against these tax credits, but the federal government will give out up to $7,500 for purchasing that new electric vehicle. The exact amount of credit depends on the battery capacity of the Tesla model you choose. Because it is a tax credit, you would claim when filing your federal income taxes. Thanks, Elon. So free money from the government? Pretty much. Don't miss out on these valuable tax credits. Research what you might qualify for and claim that sweet tax cash. Now let's talk about how the rich use income shifting to their financial benefit. There are a variety of ways we could go when we talk about income shifting, but let's make sure you understand what we were talking about in the first place. Income shifting involves redirecting a stream of income, such as from an investment or from a business. It moves from you to another person who will not pay near as high a tax rate on it. When you do this, you are actually giving away your income, so it typically happens between family members. Now, you can't do this with earned income. Unearned income is what you can use for maybe an investment or maybe you're self-employed. So for example, you might be in the highest tax bracket, let's say 37%. Meanwhile, your family member is in a much lower tax bracket. You can transfer that unearned income into their name so that, let's say, maybe a 12% tax is paid instead of a 37%. Now, let's say you normally help out this family member anyway, but now the IRS can't take near as much now that the money is transferred into a much lower tax bracket. You can hire a family member if you own your own business rather than have it be taxed at your rate as well. Many of the rich and famous employ opportunities like this, reducing their tax bill. Last and finally, let's talk about offshore tax havens. This is where things can get a little dicey. Just ask celebrities like Ringo Starr, Claudia Schiffer, and Julio Iglesias. They have all set up companies offshore in places like the British Virgin Islands, where tax rates are low or zero, and where their businesses and their identities are hidden from the public. Those three, to my knowledge, have not had any issues with this. Shakira, on the other hand, Shakira has used offshore companies to manage her global music business, but that didn't go so well, leading to a tax evasion investigation where it was ruled she failed to pay over $16 million in taxes. Now, the way this works is that you choose a tax haven, typically a jurisdiction known for low or zero tax rates, such as maybe the Cayman Islands, Switzerland, or even Bermuda. And these places typically have robust privacy laws and minimal reporting requirements. Now, these individuals typically set up offshore entities like trusts or corporations or LLCs, which hold the assets or receive income on behalf of that individual. The offshore entity manages the income and investments. If the individual needs to access the funds, they can transfer money back to their home country. This oftentimes triggers tax obligations depending on local tax laws and regulations. Using offshore accounts for tax avoidance must be distinguished from illegal tax evasion. It's critical for individuals to ensure compliance with all relevant laws and regulations, including reporting requirements to their home country's tax authorities. As with each of these secrets of the top 1%, consulting with a tax professional or legal advisor is essential to navigate the complexities and ensure that offshore arrangements are lawful. By understanding deductions, investments, and tax credits, you can take control of your tax situation just like the wealthy do. Now remember, this isn't about loopholes. It's about playing by the rules and using the tax code to your advantage. Want to learn more about certain tax strategies? You should definitely subscribe if you aren't already. It's free and it does really help out the community. Also, please leave me a comment below and let me know which secret you think is the easiest to apply to your own situation. And don't forget to like this video. It helps to spread it to other like-minded individuals just like yourself. Thank you so much for watching, and I'll see you in the next video.